Good morning, everyone. Hope everyone had a great weekend. And today is Monday, 28th of September 2020, and the time is 11:05 in the morning. And we are going to analyze Nifty, Bank Nifty, take the stock picks of our week, and see what the market has done in the last few weeks, and also see what's going to happen in the next couple of weeks and what levels we are at. So I'm going to start off with Nifty daily time frame first. Okay, and if you guys have watched my video in the past, you must have seen that we had drawn these two lines for Nifty, which was this yellow line and this gray line. So based on that, we have actually taken the exact same support, and from there, when I say support, I mean on the lower level, of course, and we had drawn that line around 10,800, and we had actually gone to 10,790. We touched the low, and from there we've taken a bounce back and come back up. So that is Nifty on the daily time frame. And today is Monday, and you can see this gap that has opened up in Nifty, and of course it's a big gap. So we need to see what happens during the day, but for now Nifty could again be heading back towards this blue line, and that line is around 11,350 levels. So far we're still in this range, and we've been in this range for a very long time. So I'll just show it to you on the higher time frame. Okay, and on the higher time frame, we've been in this range for about 3, 6, 9, 10, 11, 12, 13 weeks, about 12 to 13 weeks. We've been in this range of 10,800 levels and 11,650. And if you watched my videos previously, you can see that we've hit this line a couple of times and come back down, and we've taken support of this line a couple of times. So we're pretty much range bound. We're also heading into the month of October, which normally October is bearish, and I don't see any other reason why October should not be bearish. We also have the economic data, which has not been so good, and a lot of people have been asking me, and a lot of students have been asking me, how do you justify the economics with the stock market, which doesn't make sense. So there are two reasons for that. One is that when you look at America is a full liquidity driven market, and since interest rates are near zero, people don't have any option or much of options rather than put their investments in gold, silver, and probably property, and the last thing they would want to put it in is probably in a bank deposit. So they put a lot of their money in the stock market. A lot of people put it in the index funds, a lot of people put it in individual stocks, in tech stocks, in auto stocks, and you can name different sectors. So same thing applies in India. So our interest rate before March was around 6.5 to 7%. When I say interest rate, I mean the repo, reverse repo, and also your fixed deposit and everything. So right now our interest rate for fixed deposit is about 5.5 to 5.75% depending on different banks. So a lot of people, what they've done is that they've removed a lot of money from their savings and started putting it in higher interest or better interest places. So the stock market on an average gives you anywhere between 10 to 12% over a period of 10 years. And now if you see the interest rate of the banks, since they are 5%, a lot of people are moving their asset class to equity, because 5.5% doesn't even cover your inflation. So I mean, if you look at inflation in India is about 5%. So your money technically is not growing in a fixed deposit. So that is Nifty, and reason why you should invest in the Nifty, and also of course trade the Nifty futures if anybody trades that. I'm also going to look at Bank Nifty now. Okay, and Bank Nifty on the higher time frame is the same, and we've seen Bank Nifty take resistance of this same black line, which was at around 25,500 levels, and we've come back to the same blue line, although we did break the blue line, but for now we are on a good recovery track, since we've opened gap up in Bank Nifty, and that is a very big gap, what you can see. So if you're a trader in Bank Nifty, you could probably go long in the banks, and also you can hedge your positions if you're a futures trader by selling higher options. So that is Bank Nifty for you. Okay, we'll also look at Indiavix, and Indiavix on the weekly charts is quite flat. So we're going to wait either for a breakout. Indiavix is basically, if it breaks out on the higher level, then we could be heading lower in the market. So Indiavix is basically India volatility, which is kind of a fear index, and based on that we go higher or lower on the Nifty. Okay, since we are heading towards our October, which is the bearish month normally, and every leap year we always have a lot of volatility in October, what could happen is that we could probably head higher, and in Nifty I'm talking about, head higher and then take resistance at the same level, which was 10,600, 650 levels, and come back down. But for now we'll look like we're range bound, and heading into October we could be just waiting to see what the market does. I have a couple of stock picks for the week, and we already picked this stock up, but I'm just going to show it to you, and that is Tata Motors. And if you look at Tata Motors, we've kind of made like a double top and a double bottom kind of pattern, and I did a couple of option strategies, and let myself take this support of Tata Motors on Friday, and of course I bought it, and it's played out well so far. And let's see what happens to Tata Motors. So that's one of my stock picks for the week. The second stock pick for the week is Reliance, and if you see Reliance on the shorter time frame, which is the daily time frame, we've got a lot of support at around 2150 levels, where we actually took the support, and from there we look like now we're bouncing back and going back up towards 2350 levels. So let's see how Reliance plays out for the week, and it looks pretty good. So we'll come to know of course by the end of the week, but please, if you are trading options, then hedge your positions, don't risk too much, stay safe and trade well. Thank you for watching.